Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, September 18th, 2025, we're diving deep into XAUUSD, the gold spot against the US dollar, a market that has seen truly significant volatility recently. The financial world is buzzing with news about the Federal Reserve's latest monetary policy decision, which saw them announce a 25 basis point rate cut, positioning the benchmark rate within a range of 4.00% to 4.25%. This cut marks the first such move since December and reflects the Fed's growing concern over a softening labor market as they anticipate 2 additional rate cuts later this year. Initially, this seemingly dovish news provided a powerful tailwind for gold prices, propelling XAUUSD to a breathtaking new all-time high, briefly surpassing the $3,700 psychological barrier. However, the market quickly digested Federal Reserve Chief Powell's subsequent statements, which included a hawkish tilt, by indicating that inflation risks were still very much on the upside. This nuanced communication ignited an immediate and sharp whipsaw reaction across financial markets, with gold being no exception, reversing much of its earlier gains. Before we dissect the intraday drama, let's first establish the broader context by looking at the daily chart. Observing the price action since early 2024, XAUUSD has been in a remarkably strong and consistent long-term uptrend. We've seen a clear pattern of higher highs and higher lows, reflecting robust underlying demand for the precious metal. This sustained ascent has been driven by a confluence of factors, including persistent global economic uncertainty and, significantly, intensifying geopolitical risks. The ongoing conflicts in Eastern Europe and the Middle East continue to bolster gold's traditional safe haven appeal, drawing in investment capital seeking security. Now, let's zoom into the 15-minute chart, focusing specifically on the intense price action from September 17th to fully grasp the Fed's impact. The chart graphically illustrates the explosive surge past the $3,700 level, hitting a peak of $3,707.30, marking the new all-time high. This was immediately followed by a dramatic reversal, as Powell's cautious tone on inflation triggered aggressive profit-taking and selling pressure. Within mere minutes, gold prices plunged, erasing a significant portion of the day's gains and creating a large bearish candle on the daily time frame. This rapid decline from the peak, with sellers quickly taking control, highlights the market's sensitivity to perceived shifts in central bank policy and forward guidance. The subsequent consolidation around the $3,660 to $3,670 area after the initial drop indicates a battle between buyers attempting to find a floor and sellers locking in profits. Understanding these rapid intraday reactions is crucial for short-term traders looking to capitalize on volatility or manage risk. Returning to the daily chart, let's identify the most crucial price levels that traders should be monitoring closely in the immediate future. The newly established all-time high of $3,707.30 now stands as the psychological and technical ceiling for XAUUSD. A decisive break above this level, ideally on strong volume, would signal a continuation of the powerful bullish trend and open the door to further upside targets. Just beneath the all-time high, the $3,678 to $3,680 zone presents a minor but significant resistance level, having served as a pivot point during yesterday's trading. On the downside, our immediate support level is the low of yesterday's volatile candle, precisely at $3,643.21. This level is reinforced by FXStreet's analysis, which identifies $3,645 as a key bullish flag pattern resistance turn support. Holding above $3,645 is crucial for maintaining short-term bullish sentiment and preventing a deeper pullback. Should this immediate support fail, the next critical area to watch is the $3,610 to $3,600 range, which represents a stronger support zone that could attract fresh buying interest. If gold were to break convincingly below $3,600, it would invalidate some of the recent bullish momentum and signal a potential shift towards a more corrective phase. Looking at the bigger picture, earlier resistance levels from the year, such as $3,130, $3,000 to $3,020, and even $2,900, have now transformed into formidable long-term support zones, reflecting the significant structural shift in gold's valuation. Now, let's consider the balance of power, reasons to be bullish versus reasons to be bearish for XAUUSD. On the bullish side, the Federal Reserve's dovish pivot with anticipated multiple rate cuts in 2025 significantly reduces the opportunity cost of holding gold, making it a more attractive investment. This scenario, coupled with persistent global inflationary pressures, enhances gold's appeal as a traditional hedge against rising living costs. Furthermore, the enduring geopolitical instability, particularly the ongoing conflicts in Ukraine and the Middle East, ensures a steady demand for safe haven assets, supporting gold prices. Any positive economic indicators from China, especially a strengthening economy, could also translate into increased physical gold demand, providing an additional boost. Conversely, a bearish outlook is supported by several factors. The Daily Relative Strength Index, or RSI, currently indicates that XAUUSD is in overbought territory, suggesting that the recent rally may be stretched and vulnerable to profit-taking or a healthy correction. Chair Powell's hawkish tilt on inflation risks, despite the rate cut, could signal that future rate reductions may be slower or less aggressive than the market currently expects, thus dampening gold's upward trajectory. Should geopolitical tensions unexpectedly de-escalate, reducing the demand for safe haven assets, gold prices could face significant downward pressure. Moreover, a scenario where U.S.-China trade tensions intensify, leading to a weakening Chinese economy, could curtail a major source of global gold demand. Therefore, short-term traders should pay very close attention to today's U.S. weekly initial jobless claims and the Philly Fed Manufacturing Index for immediate market reactions. Tomorrow, Friday, will also be pivotal, with major monetary policy decisions expected from the Bank of England and the Bank of Japan, which could introduce further volatility and directional cues for XAUUSD. To briefly recap our key findings for XAUUSD, gold successfully pierced $3,700 to establish a new all-time high of $3,707.30, but encountered fierce selling pressure. Currently trading around $3,668 to $3,679. The immediate overhead resistance is the $3,707.30 all-time high, with strong resistance also expected around $3,678 to $3,680. We assign a 60% likelihood to XAUUSD retesting the $3,707.30 level if upcoming U.S. economic data comes in weaker than anticipated, strengthening the case for more Fed rate cuts. On the support side, $3,643.21 and the critical $3,610 to $3,600 range are crucial. There's a 50% chance of a retest of these support levels if market sentiment turns more hawkish following tomorrow's central bank announcements or stronger U.S. data. A sustained break above $3,707.30 could quickly pave the way towards $3,750 to $3,800, a highly probable outcome under continued dovish Fed signals. Conversely, a decisive breach below $3,600, while less likely in the immediate short term, approximately 30% chance in the next few weeks, could trigger a more significant correction, bringing those strong long-term support levels around $3,130 and $2,900 into play, especially if geopolitical tensions ease and the Fed becomes more hawkish. Always remember to monitor the U.S. dollar's performance and the broader risk sentiment in global equity markets, as these are critical correlative factors for gold's price trajectory. Thank you for joining Explain the Charts. Don't forget to like, share, and subscribe for more in-depth market insights and technical breakdowns.